Welcome to another Market in Minutes review. I recently caught up with Laura Hodges, one of our steel market consultants in the United States. Here's what she had to say.
Hi, Laura. Welcome to the Speaking of Steel podcast. Thanks for joining us for our Market in Minutes update this month.
Thanks for having me. I'm excited to do our first MEPS podcast and, of course, to share what we're seeing in U.S. markets.
Great stuff. And I know you've got a few thoughts in mind, so I guess probably start covering the big news in the US steel market this month, which we clearly covered off in the International Steel Review. But what are the key stories?
Well, there was a lot going on. It was an exciting month for steel markets over here. The first one, of course, was the ongoing situation with whether Nippon Steel was going to acquire U.S. Steel. There's really one major hurdle that this deal needs to get through, and it is regarding this Committee for Foreign Investment in the U.S., or CFIUS, as they like to be called. And that is the committee that decides whether the acquisition has merits national security concerns. So it was widely rumored at the beginning of September that the CFIUS was going to deliver the results of its 90-day review with a no-deal recommendation and to hand that report off to President Biden, it was widely expected that President Biden would reject the deal. A couple of weeks later, Nippon Steel pulled out all the stops. There was a big debate here in U.S. markets, and in the end, CFIUS decided to embark on another 90-day review of the deal, which would deliver the results to President Biden after the elections in December. So at this point, the decision has been delayed for another 90 days. The second big news, of course, was a trade case was initiated by Steel Dynamics and other U.S. players for core steel imports or galvanized steel against 10 countries. And of course, the significance there is the size. 10 countries. These 10 countries represents currently about 80% of galvanized steel imports into the U.S. So needless to say, both of these decisions, depending on which way it goes, could have implications on U.S. steel supply.
Absolutely. And I guess one of the things you'd like to explore with us is that supply and demand side in the US market. What's happening in that respect?
Well, I'll start with the demand side. What we're hearing about from industry, our MEPS research partners, people that we speak to on a regular basis, they've been pretty downbeat over the last couple of months about steel demand. And the main reason is really this buyer's reluctance regarding uncertainty mainly from the upcoming U.S. elections on November 5th. And we're really starting to see that buyer's reluctance come through in the data as well. Last week, S&P Global released their flash PMIs. And on the manufacturing side, those PMIs reported another decline for September. And more importantly, that decline was the third consecutive month under 50. And for those that may not be following PMIs, anything reporting a 50 or below 50 represents contraction in the industry. Also, two major end markets for steel demand is, autos and construction. And auto sales have just still been not up to where we want. They haven't regained post-COVID or pre-COVID levels. And construction spending has really stabilized at best. And in fact, we've started to hear about a few investment projects starting to be delayed or postponed due to some of this uncertainty in the market. So all of that, of course, is going to impact steel demand. Now, on the positive news, good news, everyone we speak to here at MEPS, they want to hear about optimism in the U.S. markets, and I'm sure globally at this point. The good news for last month, of course, was the Federal Reserve's decision to cut interest rates. after a year of holding them at 5+%, they cut them 50 basis points. So that should really, and also they, not only that, they signaled that further rates would be coming by the end of the year. So that's been a significant shift in what they've really been, signaling to the market. But all of that will be a positive development, given how much, autos and construction need financing, that relies on interest rates. And so that should really be a positive development. And as we move into 2025 for steel markets.
Good stuff. It's nice to hear some positivity, Laura.
We love to talk about positivity. People want to hear about positivity right now.
I'm sure they do. And from the supply side, what's happening in the US right now?
I think what you're seeing on the supply side is that supply is trying to adjust to the demand levels. So through August, we have seen steel production is down about 2% year to date. And that's according to the latest figures from World Steel. And there's a fair amount of planned maintenance outages coming in the coming months. So in particular, Cleveland-Cliffs just announced that they were going to indefinitely idle its number 6 blast furnace in the Cleveland area after a 2-week maintenance period in October. So the significance of that is that it's a fair amount of annual capacity. That blast furnace in and of itself is 1.5 million short tons of annual capacity. So that plus all the other maintenance outages planned over the coming months should really start to make a difference in adjusting supply with demand. Further, you also have imports starting to come down a bit after the April-May peak. Imports right now are hovering monthly run rate around 2 million coming in, which is a bit of a drop from where we were just in April and May time period. And one of the main reasons, of course, is the price levels that we have in the US market right now. There's really simply no advantage to import right now. So that those two things combined should really start to align supply with demand a bit better than they have been.
We've already alluded to that it's hard to separate one thing from the other, but you talked a little bit about price there and the effect that these maintenance outages might have in the coming months.
Absolutely.
Where are we at with the prices now, and I guess in the near future, in the coming months?
Great. Well, MEPS did release their September pricing, and for a hot rolled coil, we assessed that at $660 per short ton. But given, as you've already said, given some of the planned outages in the coming months, October, November, even in over the next couple of months, we do see that will help keep, particularly given I guess I would say lackluster demand levels, range bound. Prices should be range bound, and we expect them to hover around $700 per short ton. It's really not until we enter 2025 that we see hot rolled coil prices start to break into the 800s. 800 short tons, and in the first quarter we expect between 800 and 900 for hot rolled coil. And that's really because you've had some of this uncertainty lifted. The elections will be over by then. You'll even have a new president installed. Either way, Biden will not be reelected. There will be a new administration installed, in January 20 is inauguration day here. Also, that'll give some time for these interest rate cuts to start to take hold and really impact the U.S. economy. And we do hope that that'll begin to lift steel demand here in the United States. This isn't without risk, I will say. There are a couple of risks I would love everyone to keep an eye on. We certainly are here at MEPS. And the first and foremost, of course, is how much are U.S. steel mills going to be able to cut production through these planned maintenance outages? One thing that I watch for that is the AISI, the American Iron and Steel Institute weekly production figures to see whether they're coming in much lower, maybe in expectation or even stabilizing. That could really start to impact our, prices in the coming months. And secondly, you probably already heard about this, but one thing that we've been watching particularly is this, the dock workers here in the United States on the East and Gulf Coast are expected to strike tomorrow. This has been a long ordeal so far of, no talks. They're not, neither party is really still talking to each other, despite multiple pleas by, I don't know if the government has gotten involved yet, but so far it is expected that the Gulf and East Coast ports will effectively be closed starting tomorrow. Now, a couple of things to keep in mind is that the dock workers, or the ILA, the International Longshoremen's Association, the union that governs these workers, only handles containerized shipments. So it's not break bulk. Nevertheless, given the potential snarls at these ports, regardless if it's container or break bulk, I do think it'll create some chaos in the ports and will hinder shipments coming into the U.S. on these coasts. So just a couple of things to watch out for. We're expecting, like I said, in the coming months, prices to be relatively range bound, but just to keep an eye on a few risks that could impede those prices.
Okay, it sounds like an extremely dynamic market, not just the election to watch out there. So I guess
there's a couple of other things going on too. I mean, we could turn to China and everything else, but for now we'll keep it to those two areas.
Excellent. No, thanks ever so much, Laura, for joining me today and sort of just mapping out exactly the risks and opportunities and summarising that market outlook now as well. That's really useful. Thanks for your time.
My pleasure.
Thank you.
Bye.
Thank you for watching that Market in Minutes review. All the insight in that section was drawn from MEPS regular International Steel review. Do contact us for details of how to subscribe.